Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The International Monetary Fund cuts India's growth forecast to 6.2% for FY20, citing weaker than expected outlook for domestic demand. Tata Sons Chairman N. Chandrasekaran says that tariff wars are here to stay, and companies have to find ways to do business around them. India's trade deficit for September was the lowest in 7 months. A deepening economic slowdown has reduced demand for imports, apparently. Wipro's second quarter bottom line and margins beat analyst estimates, also raises its revenue growth guidance for the third quarter. And Asian markets are off their opening highs after tensions between China and the US flare up yet again over protests in Hong Kong. Let's talk about the US markets. Now, US stocks touched 3-week highs led by healthcare and financial shares as earnings season began in earnest. Renita Young of Bloomberg News brings you the trading action from yesterday's session in this report.
U.S. markets ended higher on Tuesday, and although the S&P 500 briefly popped above 3,000, that was the first time it did that in about 3 weeks, it closed out the session just below 3,000, though still in the green. During the session, we saw major sectors leading like healthcare, tech stocks, and bank stocks. No surprise, because banks kicked off the latest earnings season. JP Morgan Chase was up because its third quarter earnings beat analyst estimates. Goldman Sachs was a little split. It reported investment bank revenue and earnings per share that missed analyst estimates. However, its equity sales and trading was a beat. And Wells Fargo earnings per share missed analyst estimates, but the next earnings to come up will be J.B. Hunt and United Airlines. Meanwhile, gold and WTI traded lower during the session. No surprise, because investors were not looking for a safe haven asset. And the International Monetary Fund made a 5th straight cut to its 2019 global growth forecast, citing a broad deceleration across the world's economies as trade tensions continued to undermine its expansion. And that's a look at the Wall Street action on Tuesday. In New York, I'm Renita Young for Bloomberg News.
Now, there have been certain developments in the U.S. that have put pressure, so to speak, on the trade deal between China and the U.S. And that's having a bearing on the Asian markets. Let's take a closer look. I'm joined by Rosalind Chin of Bloomberg News from the Hong Kong studios. Good morning, Rosalind. Some of those Asian markets off their highs from earlier this morning. How's it looking as of now?
Good morning. Indeed, you're right. So we've got markets like the Topics, which in fact had reached highs not seen since December, coming off those now, retracting slightly, but still making some pretty fair gains today. Topics up by 0.9% right now. The Nikkei up by 1.33% at this moment in time. We do have a lot of market sensitivity still remaining, uncertainty deepening around the outcome of those talks between the US and China in terms of trade. China, of course, holding out still for the US to roll back tariffs. They're saying they are willing to buy more US agricultural products, but they want the US to roll back some of the tariffs that were meant to be imposed later in the year. So we've also got another development this morning, which is slightly perhaps muddying the waters as well, and an extra element to consider, which is China threatening to retaliate if the US Congress follow through with enacting its Hong Kong Human Rights and Democracy Act, which passed through Congress this morning, passed through the House this morning. The 2019 bill basically looks at whether Hong Kong remains sufficiently autonomous from Beijing to justify its unique treatment under the US law. That's partly, of course, been pushed by the fact that there have been these ongoing protests here in Hong Kong for about 3 months now. So essentially, this is one of 4 measures which were passed by the US House in unanimous votes on Tuesday. The bill does provide for sanctions against officials, quote, responsible for undermining fundamental freedoms and autonomy in Hong Kong. A similar bill is pending before Senate. And as you know, Hong Kong is very much a red line when it comes to Beijing and its pride and its interest. So this here, another area in which it's being provoked slightly. So sentiment a bit, being affected by these comments from China about the bill which was passed in the US. So a lot of sensitivity still remaining. In China, the markets are just open. They are slightly higher today. The Shanghai Composite up by 0.3%. The CSI 300 making gains of around the same amount. Hang Seng Index up by just 1/10 of 1% at this moment in time. Looking at Korea, though, that's making gains of 0.4%. We did have the BOK, the central bank, earlier today saying it's cutting its rates to the previous record low of 1.25 from 1.5. That was widely expected. Stimulus there, of course, coming from the Korean central bank, joining a chorus of other central banks which have been doing the same. And also one final look at Japan, where we're looking at tourist numbers there, because those have been continuing to fall since pretty much July, and that is partly because of visitor numbers from South Korea dropping. South Korea is one of the biggest provider of tourists to Japan, and that is partly because of trade again. So we've got the Japanese authorities basically imposing extra restrictions around exports going to South Korea, which are beneficial, needed for South Korea's tech industry. That has created a lot of friction between two countries. We're seeing tourism in Japan falling as a result of that. And finally, Australia, S&P ASX 200, that's making gains of almost 1%. Back to you.
Thanks so much for that, Rosalind. Now, let's have a look at what else is making headlines across the globe. We've already discussed a few. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with the fresh doubts, I should say, over President Trump's mini trade deal. Sources in Beijing are saying China wants tariffs rolled back before it will agree to boost purchases of American farm goods. Now, we're told China is ready to start buying more agricultural products as part of the Phase 1 agreement, but is highly unlikely to reach the $40 to $50 billion touted by President Trump in the current circumstances, especially given the latest news. Turkey, meanwhile, continues to send forces and armor into northern Syria, despite growing calls for a ceasefire in its battle with the Kurds. The U.S. has imposed sanctions on 3 top Turkish ministers and says harsher measures are in the pipeline. Meanwhile, Washington's withdrawal of troops from the region has left Russia as the de facto power broker. Moscow says it will not allow Turkish forces to fight the advancing Syrian army. Sterling jumped as UK and European Union negotiators seem to be closing in on a new draft Brexit deal. Officials in Brussels say the talks have not concluded and there could still be issues, but there are clear signs that a legal text is being readied. The aim is to present the draft to EU delegations on Wednesday ahead of Thursday's Leaders Summit, and that sends sterling to its highest in nearly 4 months. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian market now. Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, lots of moving parts with regard to earnings, but seemingly a bit of positivity, both from the US markets as well as from the Asian markets this morning. Seem to be a little positive going into trade today.
Yeah, so Alex, at least today, in terms of earnings, there's going to be a little bit of a pause before we start seeing the big earnings once again start flowing through. Of course, the global markets are going to have an implication on the Indian markets, and that is indicated by the SGX Nifty, which is showing an up move around 0.3%. Half of our markets yesterday. What did the Nifty do yesterday? Well, up 8%, pardon me, 0.8%. And we have seen gains in the Nifty and mid-cap, small cap indices, but those gains were not to the tune of what we saw in the large caps. A lot of strength, in fact, in the banking index, up around 1.3%. But moving in, how our ADR is doing? Well, for now, we have gains in Vedanta, ICICI Bank, Tata Motors, HDFC Bank, all of them doing reasonably well. And Wipro remains unchanged. Of course, the company announced earnings, and we're going to have to wait and watch as to what sort of an impact it brings, because we do have a beat on the operational level. But coming down to your fund flows, well, we have a buy figure to the tune of 436 crores, the second straight day, and FDI is also buying into Indian equities. So there's been ever so slight increase in the buy quantity as far as your FIs are concerned on a weekly basis. In terms of contributors, it was essentially the private banks, HDFC Bank and Kotak Mahindra Bank, along with HUL and ITC advancing. Well, we did see some weakness in Infosys and Bharti Airtel weighing down on the indices. But let's move on and talk about your futures and options space, because we did see a lot of longs building into the system, 7% added in open interest. Moving on, we also have the Nifty banking futures, which is seeing about a 2% increase in open interest. So that said, well, at least as far as the range is concerned for now in the near term, we're keeping an eye on the 500-point range between 11,000 and 11,500 in terms of change in open interest. Again, well, traders took the opportunity to write the 11,300, 400 puts. Of course, your India VIX came off by around 3.3%, and on expected lines considering indices advanced. Below the mark of 17, the Nifty put call ratio also surprisingly stood at around 1.3, so we did see an up move there. And as far as your stocks go, Century Textiles, well, it continues to see increase in open interest. Just Dial also considerably weak. Interglobe Aviation looking at a decline, and of course Canara Bank, Ramco Cement and Gandina Corp looking at some sort of unwinding coming through. But again, Alex, at least as far as the mid-cap, the broader market is concerned, it's going to be a little more about the earnings once again.
Thanks so much for that, Agam. All right, the International Monetary Fund has cut global growth outlook to a decade low of 3%, and India has not been spared. The growth forecast for India has been cut by 1.2 percentage points and now stands at 6.1% for the current financial year. Vishwanath Nair, who is in Washington covering the IMF annual meeting, reports.
In the latest edition of the World Economic Outlook, the International Monetary Fund has projected that India will grow at about 6.1% in the current financial year. This is a 120 basis point downward revision as compared to the projections that were put out in April. What the IMF is also projecting is that in the next financial year, this growth will go up, the GDP growth will go up to about 7%. Here again, the outlook has been, the estimates have been revised downward by about 20 basis points as compared with April. Now, largely the reason for this downward revision is a weaker than expected domestic demand in India, which is playing out in the country and thereby creating some sort of a slowdown situation. What the IMF is also saying is that future growth will be aided by easing monetary policy and the lagged effect of that monetary policy playing out, as well as certain measures that the government has taken, including easing corporate taxes in the country. So all of these factors will play in for better growth prospects for India in the coming year. However, during the press conference, after the report was released, Geeta Gopinath, the chief economist for the IMF, had pointed out that India is currently facing a lot of negative impact from the unfolding non-banking financial sector crisis that is playing out in India at this point in time. What she said is that the government has been doing a few things to fix this problem. However, India needs to do a lot more. Apart from this, India also needs to focus a lot on the fiscal deficit and stay on a consolidation path, is what the chief economist of the IMF had to say about India.
Let's, in fact, listen in to what IMF chief economist Geeta Gopinath told BloombergQuint's Vishwanath Nair when he asked her about India's shadow banking crisis.
In the case of India, there has been a negative impact on growth that's come from financial vulnerabilities in the non-bank financial sector, and the impact that's had on consumer borrowing or borrowing the small and medium enterprises. Appropriate steps have been taken. There is still a lot more that needs to be done, including cleaning up of the balance sheets of regular commercial banks. So in our projections, we have that India will recover to 7% growth in 2020. And the premise is that these particular bottlenecks will clear up. I mean, on the fiscal side, in the case for India, there have been some recent measures, including the corporate tax cut. There has not been announced anything about how that will be offset through revenues at this point. So it looks optimistic, the revenue projections going forward. But it is important for India to keep the fiscal deficit in check.
All right, moving on now from the economy, Tata Sons Chairman N. Chandrasekaran says that trade barriers are the new normal. Speaking to Bloomberg Television, he says while these skirmishes hurt business, multinational companies like his, which operate across the globe, have to necessarily live with it.
It's better to be looking at glass full, half full, and then fall forward. Currently, I think the trade tensions is happening in multiple places. You have the US-China issue, you have the Brexit, and then you have the Hong Kong issue, and things are happening in different parts of the globe. The fact of the matter is, technologically, we are getting tightly connected more and more, and nations are getting more protective, and this is going to be the new norm. So I feel it better get adjusted, and it's one of the essential skills to operate in this environment for the 21st century.
You do a great job making clear that this is something every executive needs to grapple with, but of those different trouble spots you highlighted, which is the hardest to navigate through, to really get your head around, because there's so many moving parts and it's just impossible to call it how it might end up, so you just have to kind of work through it.
Yeah, I think sometimes it's better to have clarity than a desirable result. For example, in Brexit, it's been too long. It's very difficult to keep doing scenario planning for very long. So one needs clarity. Ideally, the situation should be that free movement of goods and people definitely is very important from a supply chain point of view for us, since we have significant investments in the UK. So we're keenly awaiting what's going to happen in the next few days in the UK. From the US-China trade perspective, that's going to affect a lot of people, because China is a very big market, and we have already been affected in our car business because of the major slowdown in China. So we are really looking for that impasse to again end, and then things start looking up.
How difficult can it be, how frustrating can it be that, particularly when in an age of multilateralism, when in an age of technology, we seem to be building up our barriers, we seem to be turning to tariffs and sanctions a lot more rather than open borders and trade. Do you worry that this is a shift for good, or do you think that this is temporary?
I think directionally this shift will continue to go up and down, but the shift is there. It's not that it's going to disappear. Fundamentally, from a physical barrier point of view, you are always going to have tariffs and immigration coming for discussion. From a digital point of view, you're going to have data localization and data privacy. And you've got to adjust to these four factors as we move forward. And it will vary between where your business is based at and how its relationship with the key countries which are your markets. For example, if you're based in India, to do business with the US, business with the UK is one thing, and if you're based in UK, the business with Europe and US, and if you're a Chinese company doing business with the US, I mean, these things keep changing.
All right, let's talk about something else. We're talking about the banking space here in India. SBI Chairman Rajneesh Kumar says that a new buyer should not suffer after acquiring a stressed asset under the insolvency process here in India. Speaking at the Bloomberg Equality Summit to Andy Mukherjee, he adds that the law clearly states that government agencies can't stake claim to assets once an account has been accepted under the IBC. Listen in.
The financial creditors are sitting in the COC, operational creditors are not. So how do they get the fair deal? That is a fair question. It's not an unfair question. And we have to find some satisfactory formula to take care of this inherent conflict of interest, that is what I call. Unsecured financial creditors, I have a different take, because the risk-reward matrix is such that secured financial creditors, we get less reward in terms of what we quote the price at which we lend. Unsecured creditors sits somewhere in between the secured lending and the equity. So there, my argument as a banker is that, one, they are sitting on the table as part of COC and have voting rights, unsecured financial creditors. So it should be decided on the table. So operational creditors case is different. It will have to be dealt with differently. Unsecured financial creditors, this is a view from as a secured financial creditor, and still, if anything is satisfactory formula, which in a resolution situation, not in liquidation situation, can lead to less litigation, that can also be thought of.
But the curveballs are not stopping. I mean, Bhushan Power and Steel, for instance. Now, ED wants to attach those assets. Now, if fraud has occurred in that company thanks to the previous management, then it's like, really, once again, your check is not coming, right? You have a willing buyer for the asset and you are waiting for your check and it's not coming.
Right. So that is what I'm saying, that all these issues are getting settled. Yesterday, even about the ED's attachment of properties in Bhushan Power and Steel, NCLAT has given a very clear direction that they have to be released and they cannot be attached. And that is the point as a secured creditor we have also made, that as far as any corporate debtors' assets are concerned which have been financed by the banks, so we have the first priority and first charge. It cannot be disputed and should not be disputed. Any action which ED or any authority has to take, they can take with the existing promoters and attach their personal assets. We have absolutely no issue, but an asset which has been financed with the bank money, there is enough evidence on record. And in NCLT or IBC process, where somebody is putting money and buying it, they are not fools to put their money and be involved in all this litigation. So
they would want
need
to be indemnified.
That is the whole purpose of IBC. But again, I am saying, because it is a new law, the understanding about the commercial principles, it differs from agency to agency, but eventually all these issues are getting settled. And IBC process, the spirit is very clear that once whoever is buying, he is buying a very clean asset, it is a clean slate, and any legacy, any past baggage, the existing promoters would be responsible, existing directors would be responsible. The person who is acquiring, they cannot be subjected to any harassment or claims from the past by any agencies, and I am sure that that will be implemented.
On to earnings. Wipro's second quarter results met analyst estimates, but what the street might take heart from is the fact that the IT services major has raised its revenue growth guidance for the third quarter. Agam Vakil spoke to Wipro CFO Jatin Dalal and began by asking him about the rationale behind the raise in guidance. Listen in.
For us, it is about the execution of some of the deal wins that we have had in quarter two. We had mentioned in our quarter one earnings call that we had certain deals that were expected to close in quarter two, and I'm happy to report that those did get closed in quarter two, and that is reflected in our execution outlook for quarter two in form of guidance, quarter three in form of guidance.
Okay, Jatin, I also want to talk about margins, and let's leave the IT services margins aside and let's talk about the consolidated margins. I think what was a little bit of a surprise is perhaps the little bit of a help that is coming in through one, IT products, and the other one is the India business. My question really is that of course for IT products, well, for this particular quarter on an EBIT basis you guys have posted a profit, and also when it comes to your losses in the India business, those losses have contracted. My question then is that eventually as we move forward, do you expect this trend to sustain, and then in that case can we expect margins to start resuming an upward trajectory on a consistent basis?
So Agam, I'll say that we had a good execution in quarter two. We are still working through some of our projects in SRE stake segment in India, and that will require, depending upon the need of closure or need of finalizing an outcome for our customer, some sort of investment one quarter or the other. So it's difficult to call on a sustained trajectory basis where you know, if we are going to only continue to increase our performance numbers from here on. It would remain, I would say it would remain certainly in quarter three, quarter four in that business rhythm. I think from third quarter from now, from the next fiscal year, I would expect that every quarter the normalization would be much better, and from Q1 of next year, I think we will see a definite trend on that. Having said that, we remain very committed to getting the best outcome every quarter. So we will continue to persevere in our endeavors like we did in quarter 2.
Okay.
I'm just a little cautious of calling out a trend too early.
All right, the Wipro management there. Watch out for that stock in trade today. Somit Sarkar is joining me now to tell you all about the stocks in news. Good morning, Somit. What are the stocks on your list today?
Good morning, Alex. I'll start off with the earnings first. ACC, where the company reported September quarter results. Now, the results were above estimates. The operating numbers were ahead of estimates on the back of lower cost. The volumes, however, were down by 2%, but the blended realization and EBITDA per ton showed growth in the third quarter of calendar year 2019. SBI Life, where the company reported its second quarter of financial year 2020 results. Now, the results were above estimates. Premium growth were ahead of industry. Margin improvement continued for SBI Life. Growth was seen across high margin products, while VNB margin also remained strong, and also the key metrics also showed growth for SBI Life. MCX, where the company reported a strong quarter on the back of higher turnover volumes. Average daily value traded was aided by gold and crude commodities. Financials were aided by transaction fees and cost controls. Karnataka Bank, where the net interest income was up by nearly 7%, net profit was down nearly 5%, while the asset quality of the bank also weakened in the second quarter of financial year 2020. Now, other stocks that would remain in focus: Bajaj Consumer Care, where the promoter yesterday sold nearly 22% stake in trade, and the buyers were HDFC Mutual Fund, Aditya Birla Mutual Fund, ICICI Prudential Mutual Fund, Jupiter India Fund, and Steinberg India Fund among the other buyers. ENI would also remain in focus, that is Entertainment Network of India Limited, where Bahrain-based Adeline Media has terminated the brand and content license agreement with the company. Now, this agreement was signed in March 2018, and the reason behind this cancellation was there was not enough market to cover the cost that the company had. Sterling and Wilson would also remain in focus because they have signed a new EPC contract for solar farm in Australia worth nearly $220.83 million Australian dollars, which is worth at close to 1,067 crore rupees. Lastly, Torrent Pharma, where US FDA has released the warning letter for its Indrad plant. Now, the warning letter deals with inadequate investigation of out of specifications, while US FDA has also highlighted repeated observations and may withdraw new approvals going forward.
Thanks so much for that, Somit. Now, on to politics. He's the first person from his family to fight an election. Aditya Thackeray is the Shiv Sena candidate from Worli, a seat that he's expected to win comfortably. BloombergQuint's Divya Malani decided to speak to him on one of his campaign trails.
We are here in Lower Parel, where Aditya Thackeray is starting his roadshow from, all the way to Worli, where he's planning to contest his first election from. He's the first from his family to do so, but has no real opposition to him in the constituency. Let's find out what Aditya Thackeray stands for in this election and whether the people of Worli are willing to give him a chance.
Aditya Thackeray को देंगे, क्योंकि पिछले 9 साल से उन्होंने मैंने अगर वो चाहते तो डायरेक्टली इलेक्शन लड़ सकते थे, बट उन्होंने वैसे ना करने के बावजूद भी उन्होंने सीधे मान क्या 9 साल ऑलमोस्ट 9 साल उन्होंने पहले गली मोहल्ले में जाके कि जो छोटी मोटी जो लोकल समस्या जो रहती है उन्होंने जानी समझी और उसके बाद में वो इलेक्शन में फर्स्ट टाइम उतर रहे हैं।
ऑब्वियसली हम आदित्य ठाकरे जी को वोट देंगे। क्यों बोला तो ठाकरे साहब के परिवार का एक कुल था एक 40-45 साल में कोई उतरा है, उसकी खुशी कुछ और है और हम लोग भर के वोट देंगे। हम लोग के सबके हाथ पैर दर्द हो रहे पर हम लोग भूल जा रहे क्या हम लोग किसके प्रचार को चलते हैं, उनको देखने के बाद हमको एनर्जी आती है अपने आप।
Why did you decide to contest polls? First from your family to do so?
Absolutely, and I've always been interested in legislative processes. I've always wanted to be a part of, contributing more to the state directly through policy making. I thought this is the best time to do so.
Now, one big question is that there is felling of trees in the RA forest.
Yes.
The High Court says it's not a forest. You have spoken about it on Twitter, on social media. But then your government is there at the state level, right?
Yes, but it's not my majority government. It's a coalition government, and the MMRCL is misguiding the other half of the government. The point is, we have done whatever we can, and we'll be doing whatever we can to stop the felling of trees. The trees that have been cut. My point is, if the MMRCL is so keen on cutting trees and so proud of it, why is the MMRCL doing it in the middle of the night, even after winning the case? If they've won the case, if they've had a moral victory in court, if they've once won against Mumbaikars, if they've won against Mumbaikars, then why do you have to do it in the middle of the night?
Between environment and development, what do you?
There is always a midway. There is always a way to do sustainable development. We have been doing that, and more so while doing sustainable development, while creating that, you also have to have a dialogue with the people. That is more than important, because finally, if you don't have a dialogue with the people, if you bulldoze people's voices, that's not going to work.
Now, your party has claimed that you're going to be the next chief minister of Maharashtra, but the BJP maintains that Mr. Tata is going to run the next. What do you have to say about that?
It's the love of the people, and I think we gave a lot to our free will of becoming chief minister, deputy chief minister, ministers. Whatever destiny has to be written will be written by the people and by democracy. I am not running behind my own dream, neither am I running behind a particular post, because I've seen a lot of people run behind a particular post and forget to enjoy the whole process. Currently, I'm enjoying the process of contesting elections, trying to win elections, hopefully winning elections, and let's see.
Now, on winning elections, there is no real opposition to you in Berlin. Do you think it looks like you're...
No, I think I wouldn't be undermining anyone. Every opponent is important to me, and I humbly respect everyone and I wish everyone good luck.
What is your view on the abrogation of Article 370, and there has been such a lockdown of people in Kashmir?
What is more important is the abrogation of 370 was a long cherished dream of the Sena, the BJP and the whole country. Even the people of Kashmir today are liberated. If you see Ladakh, if you see Jammu, if you see Kashmir, all of them will feel liberated as soon as things open up soon. I hope a lot of good investment goes in there. It opens up for tourism, for investment. It'll be good for the country.
And the BJP using it as one of its big poll pitch in Maharashtra. Do you think it's going to work for you guys?
Honestly, it has been, it's not just a poll pitch, but it's been a promise for the Sena and BJP for the last 30 years. It's a good thing that we've achieved it. It's good to say that, okay, we promised this and we achieved it. But there are many poll issues in Maharashtra which we have been tackling for the last 5 years and the next 5 years.
And what do you have to say about Ram Temple? That's been one of your
Yes, and that promise we revived last November when our party president Uddhavji, all of us went there. After that, the UP government renamed that district as Ayodhya. The case started getting faster. So we hope that there'll be a decision soon.
And do you think it still matters, the Ram Temple, is it still relevant today?
It is a matter of sentiment for every person in this country. If you go there, if you visit, I've had a good personal experience visiting there. It's a good energy out there. And it is equally, important to every person.
All right, Aditya Thackeray there, ahead of the polls here in Maharashtra. Let's talk about some of the stories that you'll find on the website BloombergQuint.com. First up, the Reserve Bank of India has decided to offer on-tap authorization for new payment service providers in 3 categories to encourage competition and innovation. The licenses will be issued to new players for providing services through Bharat Bill Payment Operating Unit System or Trade Receivables Discounting System, or to set up white label automated teller machines, according to a statement from the RBI. And in the M&A space, Blackstone Group and a rival consortium led by KKR are considering bids for the cement unit of Indian cosmetics to paper conglomerate Emami Group, according to a Bloomberg report that quoted unnamed sources. TPG Capital is also weighing a bid for Emami Cement and could look for a local partner. KKR, meanwhile, is in talks to team up with detergent maker Nirma to make a bid. That's all you need to know going to trade today, but do stay tuned. There's a lot more coming up over the course of the day, only on Bloomberg Quint.